We are live from the TulipDAO for our 23rd Investors AMA with the Zest Protocol coming to Fantom Chain. They are a algorithmic, I'm going to try to get this right, algorithmic stable synthetic protocol with farms that reduces impermanent loss by emitting their own token through various stages of the protocol. So we are interested to learn more about the team. We're interested to learn more about this new meta that seems to be popping up with with impermanent loss reduction. So welcome to Dunebug, welcome Lemon World and Citrium. If you guys could please start off by introducing yourselves, introduce the team, and your roles, maybe your background in crypto, and what made you develop this project on Fantom.
Sure. So I'm Citrium. I'm kind of the tech person. I've done the contracts and I've done the React bit of the front end. So crypto-wise, unfortunately, my first real crypto project I was in was SafeMoon. So you can imagine how that went. Since then, I've kind of just been fascinated by the actual technology underlying the blockchain. I've been coding like a few kind of hobby projects. This is the first serious one. So I keep trying to find, or I like trying to find new ways to kind of improve the user experience for everything that I'm coding, basically. So that's why I've tried to, code in quite a few, not necessarily completely unique and novel features, but just to bring something a bit more to the table for Zest. So I saw, the Phantasm launch, and I thought it was a very interesting protocol technically, and sort of started from there, really. Yeah.
Yeah. Hi, I'm Dunebug. I'm the kind of one from a traditional finance background. Moved into crypto sort of in 2016, but only really on the peripheries for kind of 3 or 4 years, and then timed it quite nicely, sort of April 2020, when the world kind of took fire, and we did quite well for the last 20 months or so. I'm kind of the business finance or community engagement type guy. Yeah, that's me, Lemon World.
Hey guys, I'm Lemon World. I'm head of design at Zest. I've mainly got a background in graphic design, digital design, and UX UI design. I'm really wanting to start to bring a lot of these skills to the crypto sphere to make Web3 more accessible and user friendly. I think there's still a lot of unexplored parts in the Web3 world in terms of design and UX, and I think Zest is the perfect platform to start to springboard some of these new ideas that are coming through and make it accessible for everyone. So yeah, that's me.
Cool. I appreciate that you guys actually brought multiple parts of the team. It makes a big difference with these AMAs. A lot of people get... We've had a few guys fall right on their face because they thought they could get away just sending some marketing guy or some shit in here like he was going to be able to answer my questions. It was cute. But yeah, here we are. I think people have learned their lesson. There's been a few people who've gotten roasted. Even most TradFi guys get destroyed up here. I hate to say it. I'm not here to debate stuff like that here, but let's dig into this stuff. I'm interested. I'm very curious about the protocol and what you guys have been doing. So to start off, I would like to know, in your own words, kind of what you have done. First of all, what is the protocol? And then what have you done differently from protocols that we've seen in the past, like Phantasm? And what makes you different? And yeah, let's start there.
I think the main difference between us and Phantasm is kind of the extra things that we've added. So in Phantasm, you lock your tokens; they're just sitting there locked. No one enjoys that. With Zest, your tokens, you can trade them on a secondary market. We've built in sort of these NFTs that hold your locked balance. And what we think the really cool thing about that is they also allow you to claim protocol fees. So you can be trading your NFTs and the recipient will then be able to claim fees. So we think that's quite a cool innovation. I certainly do anyway. It's my pet. But just seeing the question. The locking period is going to be 8 weeks.
Are they VE-NFTs?
So yes and no. We have got the ability to kind of allow people to gain extra interest on the NFTs. That would be something that we could do in the future. At the moment, they're not technically VE NFTs. That's what we've called them for now. About the locking period, yeah, it's always going to be 8 weeks. It's immutable at the moment. We would have to do a redeployment to change the locking period. That's the minimum. You can lock for longer, and that's how we're going to sort of give out our governance power on the locked balance and the locked time. So that will be coming in kind of a future update. We're going to introduce a snapshot space for everyone to govern the protocol. And
yeah, if you could let me ask the questions, please, because we get off track if we don't. But if you could just try to focus on what you've done differently, like stay with that VE. Can you explain the rest of the NFT and how you guys are going to kind of work with that in the future? Is there any other, like how much percentage of the protocol fees are we getting from the NFTs if we hold, etc.? Is that based off the locked balance?
Yeah, so that's based off the locked balance. Your locked time doesn't entitle you to any extra fees at the moment.
Right. So increasing the lock doesn't matter. But what I was trying to figure out is so people can kind of figure out how much they're going to be earning, right? So how much of the total protocol fees are going to the NFTs in total?
90%.
90% of all protocol fees are going to NFT holders?
We're going to distribute 90% of the protocol fees to lockers and stakers. So that will be the VE NFT holders.
Wow. Okay. And then the 10% is for upkeep and team?
Yeah. So that's going to be our marketing budget and all of our sundry expenses, gelato tasks, everything we need.
You're doing it all wrong, friend. You're supposed to take 90% for the team and then you do 10% for the NFT holders. Jeez. Wow.
Maybe next time.
NGMI. No. That's impressive, dude. Seriously.
I mean, I was in, I can't remember the Phantasm Fork, the name of it, but that dev was taking like 50% of the protocol fees, and it was like, no.
Yeah. And I think that most other ones don't really display the numbers that specifically. The shady ones, anyway. I'm bullish on that. That's really, really nice. So you lock your tokens. This was the issue. That was a big issue with Phantasm forks. Like you buy the tokens and you lock them, and then you just get fucked. But if you're creating utility and you're earning passive fees as well, on top of, because it's also staking rewards as well, right?
Yeah, you get your lock APR, which is displayed on our staking page. So
yeah, sounds great, dude. So do you have to stake the NFT, or is it just automatic?
You do have to go onto the site and click claim your fees, but it will tell you exactly how much you're accruing block by block.
So it automatically accrues if it's in your wallet. You just have to go claim.
Yep.
Dude, sounds great.
Yeah, it's my favorite feature.
Okay. One of the other defining features you guys have is impermanent loss protection. Can you dig into that and how you're achieving it and how it's sustainable, and how are we going to counteract the sell pressure on the Zest token? Because I think that's probably the big concern here.
Yeah, I think in terms of sell pressure, one of the things we've seen in Batasm, which I think is an example of a good Phantasm fork, they changed their liquidity weighting per farm. So in the original Phantasm, it was 70% of emissions went to the stable pair, the Fantom synthetic versus FTM, and 30% went to their native token. And obviously that had the effect of incentivizing people to provide liquidity much more to the stable farm. So there was less liquidity in the native or utility token LP. So the sell pressure that was there was kind of amplified because there was way less liquidity. So we've followed the technique that Batasm has used. So we're weighting 70% of emissions towards our token, so that it's a little bit
incentivize us to fatten that LP up. Yeah.
Yeah.
That was under our advisement that Batasm did that. So, or through the TulipDAO. So we've been in close talks with Batasm. We've been working with them. We've been supporting them. That's why there's been a real strong floor on that. One of our shitcoin surveyor in here is a big supporter. He's been helping them hold a strong base on that protocol. So, one thing to keep in mind is with these forks, or not, I shouldn't call it a fork, but with these spoons, if you will, you still need strong organic community, and you're still going to need that strong base of users to hold that LP. And that's really the hard part. Also achieving POL, like you guys have outlined in your docs. I see you guys mentioning POL here, but it doesn't really say how you're going to acquire it. I understand you have temp. It's not really POL if when they mint and then redeem, it removes the liquidity. It's not really your liquidity. So I'm wondering if you've got some bonding mechanism coming in, or if a percentage of the mint fees goes to adding that, or how is that working, or how do you see that being solved?
I think bonding would be a really cool addition to the protocol. So thanks for that idea. But no, when the collateral ratio is less than 100%, we will start to accrue some protocol-owned liquidity, and that's going to go to our treasury. I mean, I know from Phantasm, I don't think it was a huge amount initially, anyway. But yeah, protocol-owned liquidity.
It takes a lot of volume.
Yeah,
that's the thing. It takes a lot of fucking volume to get those numbers up. So that's kind of what I'm worried about is that POL, because it really could help these protocols. Massive pre-sale would fucking help so much. This type of protocol, if I had $1 million starting up, imagine how much more stable it could be. You could launch with multiple farms, multiple tokens, get some partner farms involved, emit your tokens, and actually have liquidity to support it. But yeah, I think that there is a way to do it organically. You just have to be careful, right? You have to be very tight with the controls. Everything should be dynamic. Like, we need to change this pool's emission rate today because this is happening, right? If you guys are willing to change on a dime, keep full control of your contracts, keep them upgradable so that you can keep updating and making improvements, should be okay. I think that we're in a spot here where people are looking for plays. People are looking for something to buy, something to degen on, something to farm, everything in between. So you're in a unique position to be one of the first movers kind of doing this kind of shit in a while, because people have been scared. Scared to launch projects. So, I mean, I'm super excited. And yeah, by the way, I do think that bonding is a really underused mechanism. It was pretty much the only good thing that came out of Olympus, if you ask me. So yeah, I think bonding is underutilized by a lot of protocols. I think when able to, sustainably release some tokens, or when it seems to be sustainable for the protocol, emitting some tokens for bonding so the treasury can pad assets and protocol own liquidity, I think It's a very smart idea for anybody, any protocol. All you have to do is make a bonding page, right? It's very simple. Simple bonding contract.
Let's just say that might come in a future update.
Give me a little footnote there of my name on it. That's cool, man. I think that is just the fact that you're on the fly. Like this is what separates teams that make it and teams that don't. Is people who are willing to hear stuff and be like, oh shit, we can incorporate that with what we're doing. You know what I mean? Instead of like, oh, that sucks.
Yeah, it's like when we're, in our zone, we've got certain things we know we want to develop, and only when you take a step back and it's done do you start looking, what other things can I be incorporating? What other ideas have we not considered before? So it's always good to, get new ideas and see if we can do them, basically.
Right. Okay. If you could, for me, I see you guys did not take an insane amount of team funds, and we love to see that. I am a little bit concerned with the lack of treasury allocation. Are you guys... Oh, this is just for ZSP. Okay, I see. Okay. Just kidding. I'm sorry. I thought for some reason this was pre-sale or something. Just kidding. Very sustainable from what it looks like. Distribution here. Vesting rewards would imply all farm rewards or just farm rewards from staking or locking.
So on the tokenomics page, the liquidity mining farming rewards, that covers all the sort of ZSP emissions to liquidity providers and staking locking rewards.
And what's the difference between the DAO and the treasury fund?
So I think the treasury fund would be used if we had like a big marketing campaign, things like that, if we had to do any recollateralization, and the DAO would be things that the DAO can just vote on at any time and say, okay, use this ZSP to do X or Y.
What does it need the 5% supply for?
So I think when we were thinking about giving it to the DAO, it was kind of just the DAO can vote to do whatever they want to do with it.
I see. So they can maybe distribute it through farming incentives or create a new vote to do a partner farm at Beethoven maybe and emit tokens there if they wanted to or something.
Thanks for another idea there. Yeah.
Yep. You're welcome. I got nothing but fucking gold gems here, sir. That's why people come.
And we have some kind of grand aspirations if we can reach kind of a significant enough TVL that maybe we can mobilize the treasury to kind of provide secondary yield for the community by, whatever that may be, by farming opportunities or wider crypto investments, kind of similar to the Rome type models that we had earlier in the year, really just to provide another string to the bow.
Yeah, you're on the right track.
Yeah, our rewards contract is quite quite versatile, so we can add in other tokens to people's staking and locking rewards.
Liquidity driving is really the way to push your protocol into the future, past initial distribution and past all this degen stuff. POL is what's going to, like, protocol and liquidity, as well as your partnerships and what you're able to do through these partner farms and with your liquidity, right, to reward your holders. Then you can pay them out in other tokens and basket rewards like Liquid Driver does and things like that.
Yeah, exactly. And that's just to pick up on your comments on kind of the team allocation. That kind of goes hand in hand with what you're saying there. Like, we note that kind of longevity is the most important thing, and so many projects, so many kind of phantasm forks come and go in 6 weeks, because they have no runway, and we're really trying to commit to that with a 2-year vest, a long-ish cliff. and
Right.
relatively modest team allocation that shows that we're here for the long run and we want to build on the community, not just 8 weeks, flash in the pan, and then we're gone.
Understood. Love that. That's great.
So going into how we are going to be launching the farms on your side today, what would someone coming new into the protocol, something that you would want them to know or look into first to be able to get a good understanding and kind of run through everything?
First thing we've been saying to everyone new in the chat is check out the doc site. We spent an awful long time kind of making it comprehensive. Hopefully there shouldn't be too many kind of secondary questions from it. It's meant to be sort of top to bottom. And then, aside from that, it's get stuck in, get your FTM ready and go for it.
I noticed the docs are very well put together, and it's actually separated very nicely. One thing I was going to say was I'd like a little bit more explanation on the treasury breakdown and what your plans are, as well as how all that money's going to be used, where you have your allocation breakdown. If you could break those down with some more specifics. If there is one bit of advice I would give you is that, because there'll be critical people like me who are really looking at this with long-term potential, and they're going to need to know that stuff.
So we take that on board because I think some treasuries have just become sort of de facto secondary team allocations where they just sell the treasury to benefit themselves. So yeah,
right.
we'll
and just a simple breakdown for people so they know that team allocation, for example. Like, what are your plans? Like, how are you going to use that to strengthen the protocol, or how are you going to use the treasury fund to strengthen the protocol? Things like that, and that will help. But I was going to say, Voids, if you could, we have a bunch of community questions. I'd like to start getting to them. They're in the AMA questions channel.
Absolutely.
I haven't started on those yet.
So I think we already answered a little bit about what Zest and how Zest Protocol is unique. And another question following, can we adjust the locking period, or is it always 8 weeks?
The minimum locking period is 8 weeks. You can increase your lock to gain governance votes up to a maximum of 2 years.
And since this is kind of in the V tokenomic side of things, once you create that position, are you able to add to it with the same time frame or with an increased time frame, or are you kind of singled into your original position?
You can increase your locked amount in a token, in a V NFT token, yes. It's a little bit complicated when you start having multiple tokens, but if you have one token and you add for the default minimum amount of time, 8 weeks, it will add it to your last token that you created.
Perfect. And do you have a developed front end for interacting with the VNFTs post creation so that you can either trade effectively between people, or is that something more so that as it's a desired part from the community that would be looked more into?
That's something I've already been thinking about a bit. I'd definitely like to have kind of a gallery so people can see all of their different locks. At the moment, it's just going to be like a list that will be populated under your locks section on the staking page. Trading the NFTs at the moment, it's going to be on PaintSwap. So they'll be listed there. People can swap them on there. If the community wanted kind of an in-house UI to do that, I think that's something we could do.
I think that's a lot of concern for people, especially trying to understand the VNFT side of these types of tokenomics, is that how does it become concrete, and people are going to go for this type of model because they want to have the feeling that, well, I'm locking the liquidity, I'm supporting the protocol, or I'm locking a token in this sense, and I can receive fees. But should I ever want to relinquish that, how do I go about the steps? And I think there's a necessity for protocols like yourself to be kind of that voice and still describing what is a very new concept to this ecosystem.
Yeah, I think that's a fair comment. I think at the moment, yeah, if once your lock has expired, you can just press withdraw, and it will withdraw all of your NFTs that are expired. But I think it would be nice to have kind of a separate interface where you could maybe withdraw just one, or just show you the next token that's about to expire, something like that.
And along the same line of conversation, we have a question. What's the difference between a VZest and a VLZest NFT?
So VEZest is the NFTs. VLZest is what we're calling our governance votes. So when you lock tokens, when you lock ZSP into a VEZest NFT, you will gain some VLZest, and that's just your governance votes. It's not a transferable token. It's just a internal balance in the contract that will be called by our snapshot space to calculate your voting total.
And I think people governance is becoming a huge topic, especially after some things that have happened in the DeFi scene of almost malicious governance positions interacting in protocols. Do you have personally any fear that a large investor would be able to kind of take such a position and interact with your protocol in a sense?
I think you always run the risk, and I think we've seen it today. In the last few days about kind of the governance where malicious actors can. What was it on Sol yesterday where they voted to liquidate like 170 million or something? And yeah, we have the same fears here, but we've taken every kind of step in the inception of this protocol to reduce the number of whales and kind of make it as accessible to everyone as possible. And yeah, we're generally trying to prevent it, but I think the fears don't go away. If there is a massive whale, I think in the current state of play in the governance world, they will have a real domination over the protocol. But we do everything we can to avoid massive whales.
Yeah, I think it'll come down to kind of what framework we initialize the governance under. We'll need to properly kind of draft a framework to kind of deem what is a valid governance proposal and what isn't, and that's definitely something that we've got our minds on.
And the foundation of creation and interaction with the protocol is definitely an essential part to be able to effectively work on both sides of things as the creator and the investor. And being aware of that, I think, is super bullish for your team in that regard. And then for the locking, I believe you mentioned that this isn't a linear scale of rewards for the lockers. The 8 weeks is at the same effective rate as the longer term lockers.
That's correct. Yeah.
Real quick, if I could, on the VE NFTs, were you trying to figure out what to do visually for the image, or?
So mainly due to the VE contract size, at the moment the image is, if you know solidly, it's just basically text.
Yeah.
The actual artwork is going to be sort of done later, and that's going to be put in via PaintSwap to kind of sit on top of a JSON layer that our contract provides.
So not really on chain.
We will probably put it on IPFS and have it so that it can't, be just taken away or go down.
It doesn't really need an image. The only important thing is that the exchange can display like a neat little card that says maybe your logo and the value, how many tokens.
Oh yeah, it's got that without a logo, but it'll have your locked balance, your locked expiry time, things like that.
I've seen this solidly once. It would be really nice to have really clean, modern text and like a logo there, like a clean logo showing expiry and value of tokens. It would just be really nice to see on the exchange, UX wise. Did we get through all the community questions? Does Zest locking duration reward scaling?
That was in question of the time frame you're locking in versus the rewards you're receiving, and
Yeah.
they're the same based on time to rewards received.
Yeah, I thought so. Yeah, how about that? Do you have any partnership talks going on? Anybody that you want to partner with in the space, or any like synergies that you can see?
I think for me, no, go on, you first.
No, I was just going to say broadly, we're trying to kind of chart our own course for the the beginning weeks, not let anyone sort of prejudice our decision making. And then, we really want to partner from a position of strength. So when we have sufficient TVL, a good community, and then sure, we're open to a number of different partnerships. But we have had some kind of limited conversations with third parties. But yeah, we don't want to jeopardize our own protocol for the benefit of a third party. We want to do it from a position of strength.
Yeah, I think the dream partnership would be Beefy, some big yield aggregator.
Beefy.
Because you've seen the Beefy's even incorporated solidly. They have their own peg token for that, so I know that they're open to at least the thought of expanding in that sense.
Yeah.
Really quick, who uses Beefy? I don't know one person. Never once in my life have I heard somebody be like, "Yo, check out this thing on Beefy." I'm not trying. I'm just interested to know why. Yeah, they have big TVL because they have like stable farms or something. I don't know why. It doesn't make sense to me. I don't know. If you can see some great synergy there, then more power to you. I don't think there's much value there for a smaller organic project like you. Are you a whale blessed? He said he uses Beefy. You used it for Tomb, didn't you? Don't lie. Everybody used to use it for Tomb back in the day.
I remember when 2Ohm got listed on Beefy. That brought quite a lot of buying pressure.
Yeah, it's great for 24, 48 hours until Harry dumps on your ass.
Yeah, true.
Fucking Harry, yay. What a guy that guy is. Okay. This is good. You guys are doing great. I love this. You guys have put together what sounds like a good plan. I want to hear your plans for launch. Can we get into that?
Yeah, absolutely. So yeah, it's 2200 UTC. We're going to turn on the emissions. So we're going to be emitting 80,000 tokens a day. Today, tomorrow it's going to go down. So for the first 2 weeks, our emissions are decreasing by 1% daily. And then after that, 0.9% for another 2 weeks.
Wait. The farm is happening in 2 hours?
Yeah.
3 hours.
Yep, farming emissions go live.
So yesterday we launched minting and redeeming, and that's been live for about 24 hours or so now. And then farms at 22 UTC tonight.
Okay. I feel like this is happening really fast, guys. We're moving real quick. We just met, like, can we have dinner first? Fuck. I have had my head in documents and shit, so it's partially my fault for being distracted, and I'm just focused on building. We have a lot of projects going on, and I'm advising for multiple protocols as well as my team, so as well as what we do here. So it gets busy right now, and I have not seen your social media. I was gonna be like, you guys should spend more time, ramping up and hyping up this launch, but I have a feeling that your social media is doing good. It is new. very new still. You know.
Yeah, we're definitely very new, and I think Phantasm sort of style projects, they seem to do better when it's a slow, steady, controlled launch without a huge influx all at once.
You're right. I take it back. You had two options, like I was saying before. The only other choice for a fork is to do a pre-sale to generate some liquidity for the token pair, right? And that's really the only other possible strategy. Did you guys consider that? I'm just curious. You guys seem like smart guys. You probably considered it, didn't you?
Yeah, we did, but we thought it kind of isn't congruent with our effort to avoid massive whales early in the project.
Yeah.
It's maybe possible, but not desirable for us. Yeah, slow burn is beneficial to flash in the pan.
Yeah. I'll tell you what, you found the right group of guys to gently pump this bitch, so let's fucking go, boys.
Let's go.
We got stuff to do, stuff to trade. Shit. All right, guys.
What farms are you gonna have available when you go live? What are the pairs and how people interact in that sense?
You know the answer to this.
Yeah.
Zest FTM and FTM ZFTM. Right? Or ZSP.
Yeah, those are the farms, indeed.
Okay. Sorry, I wasn't trying to front run the answer, but he knows. Voice knows the answer.
Community question.
Oh, was it?
Yeah.
Okay. I apologize for
I speak as an advocate, sir.
my crassness. Yeah. So, Captain Crypto, just so you know, sir, generally the way that these synthetic protocols work, okay, it's a pegged token that's pegged to Fantom. Oh, okay, cool. Yeah, so I'll just say it for the general community. There's a token that's pegged to Fantom. It's collateralized, backed by Fantom tokens, and partially backed by their own protocol tokens. You can mint and redeem this token at different rates, but anyway, regardless, generally when the farms launch, you see their peg token launching with the Fantom pair that's supposed to be like a 1-to-1. It's like technically like single staking Fantom is the idea, but you get higher APRs and stuff. So you get similar exposure to Fantom while being able to farm with much higher rates, and it's backed whatever. You run the risk of it losing peg if certain things happen, but this is DeFi, and you want to make sure that you find teams that can actually try to provide solutions to those issues, and it seems like that's what we have here. So, but anyway, the emissions token is generally different. So you have emissions token, peg token, paired with Fantom generally. So, why doesn't anybody do stable backed, like Coffin? This is why people liked Coffin. You know what Coffin is?
I can't say I heard of Coffin.
Coffin Finance. Partially backed, partially collateralized algo stable on Fantom chain. I actually worked with them for a brief period before I started TulipDAO. They had the attention of a lot of whales because it was a partially backed stable, not pegged to Fantom, right? It was pegged to USD. Didn't really work. They got exploited, bank ran.
Yeah, I just went on their site and I see that we have disabled redeem functionality, temporary.
Yeah.
Again? Damn. So farm, we have ZSP in circulation already. So everybody understands. ZSP is the token ticker. Don't go aping this shit. There's $160 in liquidity, you gorilla. Chill out. Look at what happened. Yeah. You pumped the damn price at $2,400 because you aped 100 Fantom, dummy. I don't know who it was. Somebody did though.
Yeah, that's a good warning for the community. Take it easy buying ZSP until the farms are open.
Just chill. Yeah, definitely just chill. Okay. Tokenomics wise, you guys have way less tokens circulating and emitting. Is that what's going on here? Because this price is pretty high. Let me just.
Yeah, we our circulating supply is just 2 at the moment. There's none. It's all going to come from emissions.
Yeah, well, I understand that part, but this is the part where it gets tricky. Is the very beginning, figuring out what the actual floor, or the bottom is going to be. What's the move, boys? I'm trying to analyze this.
So maybe now this is the time we start to kind of break down how we should play into the protocol for people that want to go and be exposed to these farms and invest properly.
Well, I'll usually do analysis after. I was just kind of thinking.
Another community question, though. What's the number one learning experience you've had from Phantasm's initial failure? I think Phantasm, particularly if you're not just looking at the foundation of the protocol and the tokenomics, is a little difficult in that sense because the team was acting fairly maliciously in trying to just get money in a lot of senses. But from learning from that protocol and how they were setting up, is there anything that you really gained in value?
Yeah, I think number one would be to engage with the community. Like, they just basically ghosted the community they had, I think. Secondly, if you're going to go cross-chain, bridge your token. I still don't understand why they didn't do that. I think they said it was because there was too much exploit potential, which maybe you could buy, given that they had just been exploited, but I don't really see it.
I think they were in the the investors were in the unfortunate position that Phantasm was never really planned for longevity in that sense, but it did spark a meta in conversations and bringing people into that type of focus. So there was something constructive out of it. How are you approaching launching this build dash bear market? And would you have approached this launch differently if we were in more of a bull market?
Yeah, that's a good question. That's a question we've been thinking about for the last few weeks, and it's a difficult one. I think firstly we'd say that we think that good projects do well, kind of absent any considerations for the market. Clearly, we would love to be kind of launching off the back of a 3-month bull run, but we think that maybe the foundations that we build in a difficult time will stand us in good stead, when the sun comes out again. Would we do anything differently? Was the question, would we do anything differently if it was a bull market?
Correct.
Yeah, I don't think we would. I think we've taken our time. I think there's definitely incentives to rush to market in a bull market, thinking, we're going to miss out on these opportune market conditions. But we're doing everything slowly. We're doing everything equitably. We've taken our time for audit, KYC, all the kind of, box ticking exercises. So yeah, I don't think so. I think we've got generally kind of market agnostic views, and we're kind of launching with a good product, and we think it'll do well regardless of the market.
I love that perspective because honestly, I don't know if I've heard somebody even use the phrasing market agnostic in sense of how they're trying to approach their protocol. And I would love people to have more of that sentiment, because you're very right in the sense that people rush into thinking that they're missing out on a meta, missing out on capturing a certain demographic of people, especially when everything's moving so fast. So building now and effectively getting that organic ground into a foundation of a more successful later market does nothing but empower you in the short term.
Yeah, 100%. We couldn't agree more. And sure, there'll be a massive rush of people when the market turns around and everyone wants to launch their new protocol, but you're competing with, a million different concepts there. And yeah, we're taking advantage of maybe some quiet time in the market where we can get a good market share and wait for things to turn around.
I think we've run through a lot. I am excited about this, honestly. There's not enough people trying to bring this type of sentiment into the market, and I feel like it's going to be able to capture a lot in the sense of education for people, a lot in a new meta and concept that's newly forming, and then also just providing opportunity to something, especially like the Fantom token, that has a lot of upward potential over time. Now, maybe there's a question that in itself, that when, let's say, the Fantom token in a more bullish environment pumps 100% itself, how is your protocol going to respond with an increasingly rising FTM price to keep that peg, so to speak?
I mean, we rely on kind of the classic market principles of arbitrageurs and relying on the correspondent pricing principle, I suppose, to maintain the peg. And I think generally we would be less concerned on a bullish FTM than continued market spiral and a bearish FTM. But yeah, we're pretty confident that with taking it slowly and having good liquidity, we'll have no issues maintaining a peg in a volatile market. I mean, it's difficult for all kind of algo stables if there's extreme market volatility, but we think generally once things even out, we should maintain very close to or the exact peg.
Good.
Yeah, I'd also like to say that you guys did well. I'm excited about seeing how this unfolds. If we can provide some organic, slow liquidity growth over a couple weeks and slowly ramp marketing up over the couple weeks, it could be really profitable for everybody involved. So just, if you are listening and you are going to do this, don't go over shilling and telling a bunch of whales and doing all that shit. You want to wait. You got to let the liquidity grow slowly over time, and you got to massage it. You got to let it marinate. It's like Italian food or some shit. Anyway, I think this is great. I'm going to wrap up the AMA. All right. This has been our 23rd Investors AMA here at the TulipDAO with the Zest Protocol. The TulipDAO is the premier cross-chain investors hub. Thank you very much.
Let's go.